Let's welcome on board Satish Pai, the MD at Hindalco, and talk about how their quarter went by. Satish, great to have you on the show. Let's first start with the supply side factors. With oil, gas and coal prices pretty much stable now, is it fair to assume that all of the benefit of lower costs is already reflected in the Q4 numbers, or there could be some more upside owing to lower costs in Q1 FY24 as well?
No, I think that, Q4 was a very good year from a cost point of view because energy costs were down. A lot of the input costs that go into aluminium went down. And hence, our costs in Q4 were down about 6% compared to Q3. I think it would be fair to say that Q1, from a cost point of view, will be flattish with Q4. I don't expect costs in Q1 to go down substantially anymore.
So give us a few specifics, what the Q1 expectation for EBITDA per ton for aluminum and copper could be.
So look, I think the EBITDA per ton on the aluminium side was about $800 per ton in Q4. I think Q1 will be in that similar range. And if you take copper, we did 598 crores of EBITDA in Q4. In Q1, we have a big shutdown going down. So that EBITDA from the copper side should come down to 350 to 400 in Q1, but it will go back up to the 500 plus from Q2 onwards.
Right. So now coming to demand side, we understand, Mr. Pai, that demand is soft on account of muted demand from both China, reduced demand from verticals like consumer durables, etc. When is it that you anticipate a meaningful recovery coming in?
So look, the softness in demand is regional, but let's start first with India. If you take aluminium demand in India and copper demand in India, it's up nearly 10% year on year. So demand in India is extremely strong. I think the weakness in demand or the worry is more in China and to some extent Europe, where it's unclear whether the Chinese demand has picked back up or not. So I think that's where I said we'll have to little watch and see what happens in the coming months. But the US demand is quite strong. The Indian demand is quite strong. Europe is sort of flattish. And really the uncertainty is more on the China side. And China is 50% of the demand. So that's why it's relevant.
Sure. You talked about geography-wise demand trend as well. But what about the various verticals, auto, aerospace, buildings and construction, etc.? How is demand on ground?
So I think if you look at it largely from a Novelis viewpoint, when we look at it, auto and aerospace are doing extremely well and the demand is extremely strong and expected to continue. Building and construction, which is another large segment for us, got impacted by higher interest rates. But as the interest rates have sort of flattened, US housing starts for the last 3 months have started to tick up. So we are expecting in the second half of this year that demand to come back. The can was going through some destocking. We think that residual effects will be seen probably in Q1 of this year. But towards the second half of this year, even the can destocking should be over. So net, we are expecting all these 4 sectors to have come back to its original demand scenarios by the second half of the year.
Okay, so what's your estimate of aluminum prices going forward with all that's happening from Peru to China and various pulls and pushes for the aluminum demand and supply? What do you think is your base case estimate of how aluminum pricing is likely to move for the rest of the year?
Yeah, I think that, it could probably be a tale of 2 halves. I think the first half is a little bit crowded by macroeconomic uncertainties. People are not clear whether the Chinese economy is doing as well as people thought it would. People are watching a little bit of the financial turmoil in the US and have interest rates gone flattened? Will that debt deal be struck? So I think this is what's keeping a little bit of volatility in the market as far as commodities like aluminium and copper go. I think the expectation in the second half is that some of these uncertainties will get cleared out. And then if we look at the fundamentals of supply and demand, then it looks pretty strong because both aluminium and copper, because of sustainability and electrification, the demand for the metal is very strong. So we need these macroeconomic clouds to get blown away, and then we will get clarity in the second half, is the expectation.
Right. Could you also give us an account, Mr. Pai, of a consolidated capex for FY24 as well as 25? We understand a lot of downstream capacities are likely to come on board soon.
So we have already guided that this year Hindalco's capex in FY24 is 5,000 crores. And now of that 5,000 crores, the two large projects are the downstream rolling mill in the Sambalpur area, which will add 170 KT of capacity in the next 24 months when the project is commissioned. And the second large part of the capex is towards the opening of the Chakla coal mine, which is fairly critical to us from a coal availability point of view. So those are the two large projects. And then from the copper side, we are doing a copper tube project for the PLI that we got on air conditioners in India. So these are some of the large projects that we'll be executing over the next year. And we have guided for a pretty large 5,000 crore capex in 24.
Sure. Lastly, Mr. Pai, your India business has finally become net debt free. Will this remain the case despite the planned capital expenditure?
No. So as per our planning, all this 5,000 crore will come out of the cash that we will accrue during the year. So our treasury balance at the end of March 24 will be more or less the same, which was roughly 12,000 crores at the end of March 23. So no, it will not put any pressure on our balance sheet. We will do it out of cash accruals.
Okay, Mr. Pai, great to have you on the show today. Thank you so much for taking time out and helping us understand what FY24 as well as 25 is going to look like for Hindalco. That, of course, is going to be a key stock to look out for given the steady Q4 that they've posted. As